We were just talking about, J&J. Okay, we get clarity. It was like
Right.
the exact opposite for Western Alliance.
Right, that's right. A little bit of lack of clarity, and it seems like the disclosures from yesterday did a bit more harm than good. On the bright side, there's more deposits that are fully insured by the FDIC, so 68% versus 55% that they disclosed previously. That's obviously good. They didn't touch the discount window at the end of the quarter, which also signifies that their liquidity needs are manageable. But unfortunately, they didn't give any updates on deposits and the trajectory and the trends of those deposit balances, which the lack of any insight within that really important metric does raise some red flags.
Herman, the market will assume the worst on this. They must have known that. Mm-hmm. So what do we think is happening under the hood here?
You could probably expect some more deposit attrition when they announce their earnings in the next few weeks. They do have about 14% of their deposits in technology and venture capital related companies at the end of the fourth quarter. So you could infer that there's some attrition there given the fact that SVB was largely focused on technology deposits, and PacWest also mentioned that 43% of their tech deposits exited in intra-quarter. So that's something that I think a lot of investors will be focused on going forward.
To Guy's point, though, why didn't they provide more clarity?
Right.
Like, I don't get it.
So it's a bit puzzling because they did offer some clarity on deposits in prior updates, but they didn't in this current one.
And they did things with like hold to maturities and stuff like that.
Right.
Like they gave color on available for sale assets also.
Yeah, lots of color on the valuation of their securities, lots of color on uninsured versus insured deposits, but no clarity in terms of deposits themselves, which does raise some eyebrows.
Is Western Alliance emblematic of the entire sector, or is this another idiosyncratic story?
It is a bit more idiosyncratic because it has grown much faster than the other regional bank space. So you can sort of lump it in terms of the growth profile over the past few years with what happened with SVB and what happened with Signature, what happened with First Republic. So it's in the same sort of cohort of Western markets-oriented banks that has grown much faster and does have some deposits that are more national in nature, which does could create some deposit outflow issues for them.
Now, we should be getting First Republic numbers next week. Are we actually going to? And does this sort of portend anything?
Right. So historically, First Republic will report during the first week of regional bank earnings. They haven't given out a specific date yet, so we're still waiting. But that's another one that will be keenly focused on for me and the investment community.
Yeah.
Herman, the sense seems to be that this crisis has died down. Mm-hmm. Has it died down, or are we just looking at something else and we're going to have to come back to it?
It does seem like the temperature has been lowered a little bit in terms of the contagion risk. We point to the Federal Reserve data in terms of emergency borrowings from the banking space in terms of both the discount window and the bank term funding program. Those numbers have declined on a week-to-week basis, which indicates to us that there's less of liquidity pressures from the banking system as a whole. But there are some idiosyncratic banks that could face some added liquidity needs, which we've seen from banks like PacWest and with First Republic as well. But overall, it does seem like the industry has proven a bit more resilient than initially feared.